Magandang hapon, Tess.
Hi, Pau. Episode 10.
Episode 10. So close
Yes,
to the end of the year, first week of December. There's snow here. I don't know actually. Do you guys have that much snow there?
it's starting. It's just flurries. Not really.
I
No.
have to take a picture of what it looks like in my backyard right now.
No way. Really? In Barrie
Y-
area? Oh, it's
Yeah,
crazy.
in South Simcoe, yeah, definitely a lot of snow. It
Oh,
hasn't
no.
stopped.
No,
So yeah. So it's
no.
good though.
No.
It's a white Christmas, so it'd be nice.
Yeah, it's just cool here. A little bit of flurries, but nothing on the ground. So
Mhm.
I can handle it anyways, coming from Ottawa.
Mhm.
It's all good. It's all good. Keep it coming.
Mhm.
Not too much because it's bad for the road, but otherwise, yeah, it's that time of the year.
And right now, I can't stop laughing for anybody watching on YouTube. Like we didn't plan to coordinate our
Oh my God.
our outfits today. We just came on and we're like, hey, it's just a coincidence that we're wearing the same color, but we
That's
don't
right.
coordinate our outfits for the podcast.
No,
Just to
it's a
put it
it's
out
a
there,
Virgo thing. Yeah,
it's
mental
true.
telepathy. Yeah, so that's funny. Yeah, it's our uniform for today, episode 10.
So, Tess, today, I think the last episode we were talking about the figures, how to jump into the market and the opportunities out there, right? And I know we've been trying to record this podcast for I think a week right now. I think it's you've been so busy.
Yeah, I've
So,
been so busy. It's really picking up.
yeah, tell us a bit of what's happening out there in the market right now.
I'm seeing a lot of traffic going on. Like there's so many buyers now out there. I think they're ready. Some are ready. Some are just like exploring to see what's the number out there. Some sellers, to be honest with you, they still have that mindset of a COVID prices. So it's still very high.
Hmm.
However, I'm seeing also a lot of low prices, like they listed it at a low price, 100,000 to 150,000 lower than the market value. It's obviously it's for bidding. They leave it there for like a week. Yeah, about a week, 7 days, and then going for bidding. And I've noticed the price really that they got is not really higher. It's just same as market value, I would say. But so I mean, I guess to bring more
So,
people in to kind of like
so
bring
is
more
that
buyers out.
strategy working in this market right now? Or you're
Yes and
finding
no.
that you're finding that they're
It's a
doing that
waste
for
of
a
time.
week and they're adjusting it back to what the price that they want.
That's basically what's happening because honestly, if the seller just put the market value, I mean, the buyer agents, they do their due diligence, right? They run the numbers, they do their comps, and obviously, whatever's sold in the area based on their most recent comparables, sold comparables are the ones that they use to make an offer to, right? And those are basically the numbers. They still end up with the same numbers. So I mean, honestly, we're still in balance market. Some areas it's buyers market, especially
On the
guess
condos.
what? Condo.
Condos are
Yeah.
still buyers for sure.
There's so many of them. If you don't price it right, and I really don't think that's the right time to do bidding wars on condos, just put the market value price and go from there. You go up or down according to I don't know how you want to negotiate it. If you're desperate, maybe sell it a little bit lower. If you're in a rush, sell it next year. But if you're in trouble and you have to really sell it fast, price it accordingly based on market value. I think it will sell faster that way because otherwise
So
they're wasting so much of the buyer's time and buyer's agent's time by pricing it very, very low just to bring
mhm.
people in to look at the listings.
Is the activity you're finding in more of the downtown core or surrounding areas like general GTA? Is it picked up everywhere or is it more so that type of property? Because as you mentioned, the condo market is still slower and like your single family detached, semi detaches are probably, like you're saying, more in a balanced market now. So is it
Mhm.
property type or is it the area that's because we're seeing more activity?
I haven't really looked at Peel region lately. I just focus on Toronto right now and the Durham side, and I've noticed that buyers got some deals. Like meaning, if a listing, for example, for a detached was listed for let's say 1 million, 1.2 million, I've noticed that it's sold for like 10 to 20,000 less, up to 50K. So what I'm saying is there's deals out there. You don't have to pay what's listed. You can actually negotiate. That's for detached. I've noticed a lot of freehold were like that. And I've been dealing with condos right now. I've been doing a lot of showings, but we got lucky and got a very good price. I think I got 20,000 lower than the listing price just recently.
Okay,
Yeah, so there's deals out there. You just have
good.
to, just look around. And again, you have to get out of Toronto if you wanted a better deal, because Toronto, I find a lot of the condos, even freeholds, they're price high. Obviously, it's Toronto, and they're not really new. You can get a better quality properties outside of Toronto, whether it's in the Peel region or in Durham or even further. So
Mhm.
I guess as long as they're open to getting out of Toronto, but obviously if you want to be in Toronto, you will be expecting more expensive.
I think yeah, if you're willing to drive out of the core, you get more space, you get a better deal for the most part, right? So
Mhm.
definitely something to consider for people that are shopping around right now.
Yeah, like 30
Yeah.
minutes out of Scarborough, east of Scarborough, and you can do the same thing on the west side. Or you can
Hmm.
go north, York region, you can go Newmarket, on that side. Just look around and just explore what's out there. Work within your
Hmm.
budget, and if you can, obviously some people they work in downtown, and so they have to be closer. They have to be in Toronto. So, I mean, do what you have to do and see what you can get out there. But there's definitely a lot of deals out there right now.
Hmm.
So,
Yeah, so it's definitely picking up on the real estate side. I can talk on behalf of like the mortgage side, which is somewhat the same,
are you
right? If we're
getting a lot
picking
of
up on here, and yeah, no, a lot more people are coming up for pre-approvals right now. So people
pre-approvals?
that
That's
were
good.
probably speaking to in the last year or two are starting to come back and talk about, hey, I'm interested to do this now, kind of thing, right? And I think, as we
Mm-hmm.
mentioned the last episode, that 50 basis point rate drop has really sparked up the market because the first couple of 25, 25, 25 wasn't really doing, like, we weren't seeing a lot of
Yeah.
activities, but this
Yeah.
50 basis point has, I think, raised consumer sentiment that there's more confidence out there. Rates are on the way down and the market's a bit more stable at this point. So
Mm-hmm.
I think a lot more people are definitely jumping in.
Yeah, and I think they should. I think if they can, if they have been pre-approved this year, I mean, and they should get a pre-approval. I really think that, and I highly recommend that they should start looking
Hmm.
and close the deal before end of the year and do their closing next year. Because next year
Hmm.
is it's we're all expecting the house prices to go up. So
So just to
I
clarify,
mean,
what Tess is saying is, like, try to lock in a deal now, even though it's not
yeah,
closing for
until
60,
next
90, 120 days,
yeah,
which brings you to
that's
next
right.
year.
That's right. You get more deals this year because next
Mhm.
year it's a lot of another thing that I want to point out. There are a lot of termination, like terminated listings and suspended listings. That's because a lot of sellers are hoping that no, they're trying to hold up on their listings because they wanted to, sell at a higher price at springtime. So what I'm
Also, that's
saying
what's
is right now
happening.
is not,
Yeah,
yeah, yeah. That's what's happening right now.
because of the
And I'll
anticipation.
Yes, yeah. And of
Mhm.
course, they're sellers, and a lot of them, some of them are not that desperate, but some are not desperate. They have the time to wait, but some that are desperate because they already bought a property and they need a property to move to. They need to
Yeah, some
sell
of them can
ASAP,
be
right?
carrying two
Yeah.
properties at this point, right? So
At the
it's
same
kind
time,
of
yeah.
eating up on their cash flow there. So, but yeah.
So depende
How,
sa kanilang sitwasyon, depende sa
mhm.
sitwasyon nila. Pero I really recommend kung financially stable sila at nagpa-pre-approve na sila, they should start looking and start
Mhm.
exploring kasi maraming mga deals out there, and start talking to your mortgage lender, mortgage broker, and as well as to your realtor.
So yeah,
Kasi sayang na
Mhm.
just this weekend, I've seen so many open houses and it's been like crazy. People line up, just to look at a place.
Mhm.
For us, it just happened that I booked it. But at the same time, it's within the 2 to 4 open house schedule. So we just go in and out. So, I mean, it's really crazy. There's a lot of people
So
going
is
out
it
now
like a lot
to,
of this open houses? Is it very busy then? Like there's like a lot
yeah,
of people going through now. There's a lot of traffic of people
yes,
looking.
yeah. Yeah, I'm seeing a lot of people are out there just checking around, and who knows? Some of them are probably still on the fence. Some probably has been pre-approved. They're just looking around, trying to
Mhm.
explore what's out there. Yeah, but I'm
Okay.
definitely seeing a lot of traffic.
Well, thank you for that insight, Tess, on what's happening out there in the market right now.
Anytime.
And one thing we wanted to touch on was the news from last month, of inflation going up slightly from 1.6 to 2%, right? Do you think
Ouch.
that there's a cause for concern there?
Yes, I think so. I mean, we're still within the parameter, right,
Within
of
the
2%. Yeah, we're still within a 2% parameter. But I think the expectation of zero point 0.5 or 50 beeps of rate reduction in December 11th will
will
be, I
be down
think,
to
now down
25
to
maybe.
0.25. There's still going to be a reduction, I think, but it won't be substantial like zero point
Mm.
0.5. It'll just
Well,
be
the Bank
25
of
beeps.
Canada just has
Yeah.
to be careful, right? Because as you
Yes.
mentioned, that the 2% is still within range, and that's actually 2% is the target. So we don't want that to creep back up. As of right now, I don't think there's anything to worry about because
Yeah.
we're within the target. But yeah, so I don't think they're going to do a 50 basis point rate cut too because of that in particular. So, well, a lot of experts have said before it was either 50 or 25, either or it's going to
Right.
be there's going to be a rate drop. So let's
That's right.
that remains to be seen. By our next episode, we will discuss that. I'm planning on scheduling that. Maybe let's do a recording right after December 11th.
Right.
So that's when the
Sounds good.
next rate announcement is, and then we can give our
Talk about the market update
talk
for
about the market
November as
update.
well.
Let's talk about what that potential rate drop will bring into the in 2025.
Sounds great. Yeah.
Well, again, December 11th is the next rate announcement, and is it 25% or 50 basis points? I'd love to hear some comments from our listeners and see what do they think, right?
That's right. And what do they wish? Everybody wishes a 1%. Of course, I want 1%. Yeah, being
well,
a
well,
variable
for
mortgage holder.
Well, for me, I also want them to do it gradually, right? I don't want it to be because I think that was the problem why we hit our inflation numbers and how what it was because it was such a steep rise of interest rates, right? So hopefully they do it slowly this time so it doesn't have the opposite effect.
Yeah. Yeah.
Mhm.
They know what they're doing. So we shall see.
Well, what I wanted to discuss as well is I know we talked about the numbers last time in regards to what it takes for you, like the actual numbers to jump into the market, right? But the one thing we didn't talk about is what other things do you need to prepare to be able to be ready to purchase, right? As we're talking about,
Mhm.
there's a lot of opportunities in 2025. So I
Yes,
broke it
Pao.
down. So
Maraming mga taong gustong malaman kung paano.
yeah.
Like what are the tips that you can throw at them, that would be so much helpful for them. Marami kasi mga buyers na nawawala. They don't know where to start. So hopefully you can clear that up for them.
Well, for people listening that are new to Canada, the rules here in terms of buying a property may not be the same from, back home, let's say in the Philippines, right? In
Yeah.
particular, like, there's has to be a lot of things aligned for you to be able to be ready to purchase a property, to be able to get approval for that mortgage, right? So I broke it down into about 5 tips of
Mhm.
what people can do to prepare to be able to purchase. The first one, number one, is in terms of your credit, make sure that you're paying your credit cards, your utility bills on time. With credit cards, I think that there's a misconception about okay, if I owe $1,000, it's better if I pay 1,000 and pay it off, right? That's actually not true. What is being tracked in your credit bureau, like credit bureau being Equifax, TransUnion, is you being able to pay it on time, like within that 30-day window, right? Because it actually records there that okay, you missed a payment, 30 days, 60 days, 90 days. That's what's being recorded. The amount of your payment is actually not showing there, right? So it's that it's it's more important to pay it on time as opposed to paying 100% of the balance. Okay, so that's my
Yeah.
number one tip in regards to getting your credit score ready to purchase. And
Yeah.
to clarify in terms of credit score, so in Canada, you have credit companies, namely, like I mentioned, Equifax and TransUnion. So you get a score between like 300 to 900, right? But for the people out there, you don't need to have that perfect credit score. Anything over 700, that already
Yeah.
qualifies you in a bank level type of financing, right? So again, my first tip on that is always pay on time. You don't have to pay the 100% of the balance, just pay it on time. And then this goes into my number two tip in terms of credit utilization. So this actually factors in a lot to get your credit score higher, is make sure you're not always at 90% of the limit of your credit card or your line of credit, because that works against you if you're overutilized. So if, let's say, if you had two credit cards, 1,000 limit, and one's at 900, one's at zero, I would probably recommend you to spread it out between the two credit cards, because your credit score gets affected by that high percentage of the limit that you're utilizing. Okay. So yeah, and also if you can try, I would say 50%, but they're even saying like 30% of the limit is where, if you were going
That's
to keep
really
a
low.
balance.
Yeah.
So between, I would say 30 to 50, keep it under there just so that it's not affecting your credit score. Okay? So if you owe, like, if you have a 10,000 limit, don't go over 3,000 or 5,000 if you're going to carry a limit. Like, I would never recommend for anybody with credit cards at 20% interest. I wouldn't recommend to keep the balance there.
Balance.
Yeah. Either refinance it into your mortgage or have a secured line of credit which has a lower rate, right? Or do a full loan consolidation. But
Mm-hmm.
at 20%, yeah, try to find other ways to consolidate your debt. Like credit card at 20%, 21% is not the way to do it.
Yeah. Yeah. 100%.
So that's number one and number two. Number three, I think this is, like, actually, I don't even know if this should be number one, because I see so many of my deals don't go through because of this. Because a lot of people come to me and be like, oh, we're doing a pre approval. And then income's okay, credit's good. And then I find out once I pull their credit bureau that there's a six, seven, $800 car monthly payment, right? That they failed to mention. So just to clarify out there, that $700, $800 car payment takes away from what you would potentially approve for a mortgage. So that payment can potentially decrease you to like 80 or $100,000. Like if you were going to qualify for 500, now you only qualify for 400 just because of that
Yeah.
high monthly payment, right?
And make sure you disclose everything to your mortgage broker, because
Mhm.
they'll see everything once they pull the credit report. They'll see everything.
I didn't add that
Everything.
here. I didn't add that
Yeah.
here, but yeah, for people,
They see everything.
like, trust me, we're on your credit bureau, and like between the broker and the lender's gonna find out everything, right?
Yes.
There are ways to find out, so we might as well get in front of the situation if there's any issues with credit or what, like if there was a missed payment, if there was a delinquency, you might as well come up front with that, because then I can mitigate and talk about
Under.
to the lenders like, hey, this was a one-off situation. And then now it's clear from their end once they receive it, like, okay, that makes sense, and they have no issues with it after, right?
Yeah.
As opposed to
Yeah.
them finding
Importante.
out. Yeah.
Yeah. Tama.
And
Importante yon kasi kailangan mo ngang explain, right? I-explain sa lender kung there are many instances na the lenders will make exceptions to the rule. So it is important that you know everything.
yeah, well, if it's within reason, if it makes sense, depending
Yeah.
on the level of lending that we're doing, yeah, definitely there can be exceptions that can be done. But yeah, I personally, from being a broker and have done this for a while, I like knowing the whole story, because we pretty much write a whole story to the lender explaining everything, right? So I would rather tell them first before they ask me. So that's kind of how I work, right?
Yeah, and get the surprise of your life. Do you know that your client has blah blah blah, and you're like, man,
Yeah. So
I
it's
hate
not
that.
it, and we both don't look good. The client doesn't look good. I don't look good as the broker because I
You look
didn't
like
know
a
that, right?
liar. Yeah, it looks
Yeah.
like you're hiding something. Yeah.
So that's
The
that's
fourth
number
one.
three. The fourth one. Well,
I love this one. It's
yeah. Well,
popular.
generally, so employment. So what the lenders are looking for is stable employment. If you just got a job, so typically we cannot accept that income from that job if you're still on probation. Typically in Canada, the first 90 days you're on probation, or some are actually 6 months.
Mhm.
So we have to get a job letter that states that you're not on probation anymore, right? If it's within that 90 or 60 days. So that has to be in the actual letter of employment. But there are exceptions to that in regards to if you are in a similar role or the same industry, they can make exceptions. They just ask for if your income is consistent with this new job and your last job, and we can confirm that with a T4. So there's consistency there, so they can make an exception. But the one thing I want to highlight in regards to employment is for people that are looking to buy a property and then suddenly looking to switch jobs or get an approval, lock in on a deal and then change jobs, because you would think that that never happens, but I know in one in particular that's happened. And I asked the client after, it's like, were you going to tell me that you were switching jobs? Because they found that out. From to throw it out there, lenders do call your employer, right? They usually call them closer to the closing date. Like, let's say if we locked a deal 90 days before, they typically call within the 30 days, just because they want to make sure that you're still employed, right? So don't switch jobs, don't change from being employed full time to being self-employed, don't full time to part time. You
Don't
can
buy
do
a
whatever you,
car.
yeah, don't buy a car. So that was the number 3. But lenders want consistency when it comes to income and employment. Okay, so that's how to think about it. So like even when we're considering bonuses for people, you need to have received that bonus for 2 years, and you take an average of the 2 years, because it's all about consistency.
Just don't
Okay.
make any changes. Just no change, period, until closing. After
Hmm.
closing, you can go and do whatever you want. I was gonna say something.
You can, but yes, within reason, Tess.
Within reasons.
Within reason.
But they get the point. I'm trying to
Yeah,
prove a
no, for
point.
sure.
Like,
No,
yeah,
no,
just don't do
exactly.
any changes. Don't do
Mhm.
anything until closing, period.
Because yeah, the one thing too is because I always get this, and like Tess actually has been great with this, because other realtors I've worked with in the past, it's like, Paulo, do you know 100%? I'm like, there's no such thing as 100% until the deal is closed,
Hmm.
because the lender can find out that, let's say, there was a fraud or there's something that they don't
Right,
believe, like after reviewing documents, they
right.
can cancel the deal at any time. It's their discretion,
Hmm.
right? So what we can get you is to maybe like 95%, there's no problems anymore. But I've worked for the lender, and there's deals that fall through the same day at
Last second,
closing,
yeah,
right? So
yeah. It's always their call at the end of the day. Yeah.
that's number 4, is a consistency in the employment. Number 5 is down payment. I think we've discussed down payment, how much it is, but in terms of simplifying the source of the down payment, I've had clients where there's like literally 5 6 bank accounts, which is fine at the end of the day, but it's just more documentation. So if you're preparing to buy a property, I would say try to focus between a couple of accounts. It's understandable if you're pulling one from RSPs, FHSA,
TFSA,
tax-free
yeah.
savings account. That's understandable, but we would need to source 90-day history, because what happens is the lender wants to know that, for one, it wasn't borrowed funds, or number 2, that there's no, it's for anti-money laundering,
It's
right? So
coming
there's
from a
no
legit source. Yeah.
legit source. Yeah. So yeah, for the most part, if you can keep it simple, put it in a bank account that, or unless you're okay with 5 bank accounts, then, and we're going to look at the 90-day history of each one. But for the most part, if you can keep it simple, it's a lot easier when you're trying to get the approval.
Yeah, ang problema kasi maraming mga brokers na hindi 'to sinasabi sa kanila ahead of time.
Mhm. So yeah, so
Paano
I think
yung
that that's the quick tips that I had. Like, just to sum it up quickly, Tess, before we go ahead. 5 tips. Number 1, pay your credit and utilities on time. Number 2, credit utilization. Try to keep, under 50%, ideally 30% of the limit of your credit card or whatever credit facility. Number 3, avoid high monthly payments, because that can be a deal killer for your purchase, right? what I'm seeing a lot is high car payments. So I've always advised people, in terms from a financial standpoint, I personally believe that buy a car that you can buy like kind of outright for the most part. Aside from if you're leasing it for business, but try to buy a car outright, just because there's other costs to consider when you're buying a car. There's repairs, there's insurance, there's gas. So there's so many other expenses. You don't want like a $700-800 payment on top of that, right? Especially if you're looking to buy a house. Okay. And number four, employment. You want to be able to show consistent income and employment. So don't be switching jobs. Like, let's say, oh, I want to buy a house, but then I switch a job in totally different industry, like right before. Don't don't ever do that. And down payment, keep it simple. Ideally, between
Yeah.
a couple of bank accounts, you need to have your 90-day history of that bank account.
I mean, they can switch jobs after closing.
Yeah, well, it just simplifies things. It simplifies things, right?
Yes.
Yeah,
Yeah,
for
just don't
sure.
do anything before closing. Don't do any, no change, no change. That's all you have to remember, no change. So, Pao, yung mga taong gustong bumili, pero they don't have enough income. What do you think about those, like, the idea of bringing other people in, yung mga kaibigan, mga relatives, para lang maka-jump in sila sa real estate market? Have you had those?
I definitely have.
Yeah.
In today's reality, it's harder to qualify for sure. So you
Oh.
need to almost like have multiple people. So there's two ways to do it. It's either you find a family member or a friend that you buy together, and it's both your property, like you both have ownership, or somebody's just really co-signing for you, right? So from the co-signer standpoint, just make sure that you are aware of the responsibilities, that you are co-signing, you are part of the mortgage, so you are responsible if there was a default in payment, right? But for the most, I've seen it work. I just think that it should all be outlined, each one's responsibility, and both parties have to have a good understanding of what they're jumping into, because it can be a good experience or it can be a bad experience, right? If things are not clear between the two parties. But it's
Pero meron,
definitely, sorry, go ahead.
yeah, sorry, go ahead.
But it's definitely an option.
Yeah.
So for a lot of people, that I think I have one right now that I had, actually it was declined. It was declined by a bank, and the client came to me and the parents were willing to co-sign, but it wasn't enough. And what I
Mm.
had to do actually was, because the parents just had a few debts that are in different facilities, all I had to do was advise the parents to just consolidate it, and then they were able to co-sign for the son, because now their payments for their debt, which was very low, was more manageable. So yeah, so I was able to get them approval, because now they did. They cleaned up their credit facilities, had one
Mm.
payment, and then now they were able to co-sign for their son. So simple things
That's
like that.
amazing. Yeah. There's always a way, right? As long as you speak to the
Mhm.
mortgage advisor. Kasi instead of, like, listening to her says here and there and reading
And everything is
stuff that's
specific
not
to
even.
and everything is specific to your situation, right? Like a lot of the things that we talk about here, like generally it can apply to you, but until you're talking to your mortgage professional, to your bank advisor, you don't know, right? So the beauty about in my situation is, like I said, that one was declined by the blue bank. I'm finding too is maybe there's just not a lot of experience now in the banking sector, just because a lot of younger people coming off, nothing against the new graduates and stuff like that jump into that career. It's just, obviously with more time you get more experience, right?
Mhm.
So if that's the first time that they're seeing it, they're not advising the client. That's actually just a great example. Is I was able to do this for a client, but the bank wasn't able to do it, just because of, I think it was just a lack of knowledge of what the
Mhm.
parents can do to help their son to qualify.
So it's important to probe and again speak to a mortgage broker to see
Mhm.
exactly where you are at and see if they can find a way to help them out. Kasi marami namang paraan. I always
Mhm.
think, like, especially now there's so many deals, and if they can find a way to jump into the market, whether they co-sign or they can put their name on title, whatever it is, just to get
Mhm.
into the market. If they're financially ready, I think they should.
Mhm. Well, yeah, like you mentioned, it's definitely an option to co-sign. It's just you have to understand what you're co-signing
Yeah.
for and what's everybody's responsibility.
Mm-hmm.
So, like I said, definitely it's a good option, but make sure you understand it. And if
Agree.
anybody had questions in regards to that, feel free to comment, send us a message, and I'll be happy to address any of those questions.
Yeah.
Okay. And so, Tess, what else is new? What else is coming up this December? We're in the first week of December. What's coming up this December?
Meaning, what do you mean? Personally,
If
or
you want,
what's?
if you want to share what's happening personally,
No, no,
we're
no,
okay with
nothing.
that.
No, no, nothing really. It's just getting busy. I've been so busy. I was like, well, as you know, you've been trying to reach out to me. We've been trying to book this sesh 10th episode, but then I'm nowhere to be found because I'm always out doing showings and preparing for listings.
I saw you were sweating there for a bit. I was getting to the December 15th changes.
Oh, yes. Yeah. Well, you're
That's
going to
what I
talk
would.
about that.
Oh, I
Yeah.
was going to talk. So, just as a reminder to everybody, December 15th, all first time home buyers will be eligible for a 30-year amortization. And then also, that also applies for, sorry, if it's a new build, then anybody can take advantage of that. You don't have to
Mm-hmm.
be a first time home buyer. Okay.
Mm-hmm.
And so that's number one. Number two, raising the cap to 1.5 million on insured mortgages. So that's all effective December 15th. Actually, like I have had a client already that I got approved based on a 25-year, and just because we cannot process the 30-year amortization, come December 15th, I'm going to try to restructure and get approval based on a 30-year amortization.
That's
So
really good.
because it lowers their payment, and it's more manageable for the client, because this specific client that I'm talking about is kind of like they're right on the limit. So I want to be able to free up some cash flow for them.
Para hindi
So
sila mahirapan for their monthly.
when you in Canada, when you're doing an amortization, when you're setting up the amortization upon purchase, let's say you do
Mhm.
start with 25 or start with 30. Just because our mortgages here are not 25, 30-year terms like the US, you're not set on that amortization. Upon renewal, you can suddenly change it. If you have a lot of money coming in, you have a big promotion, you want to do 15 years, you can do 15 years.
Mhm.
So don't worry about it. If it gets you into the market now, I still think it's beneficial. I do know that overall there's higher interest costs associated with a longer amortization, but you can always make up that interest, right? By
Mhm.
either doing prepayments or shortening your amortization upon renewal.
I like those options. Yes.
Mhm.
There's always an option to find a way to make it to pay your mortgage faster, which also means that you're paying less interest long run. Anything else? Yeah, that's a very good reminder, Pau, because that's we're now in December 2nd and that's December 15th
December
change.
15th.
Yeah, so a
That's
lot of people might forget, so I just want to
mhm.
remind them.
And like I mentioned, right? So it's something that I'm already somewhat utilizing, in a sense that I'm getting it approved now because, like we're locking in deals now, but to take advantage of it, I just have to resubmit it upon after December 15th, and then try to get approval for the 30-year. So right now it's approved based on 25. I'm going to get it done up based on 30 years. Well, in my situation though, like the client does barely approve for the 25-year amortization. So now they're going to have more cash flow come
Yeah,
December 15th, because now the 30-year, once I get it submitted, it is going to lower their payments.
that's great news for that particular client,
Mm-hmm.
right? There's always a solution for every type of client based on their situation. That's good.
Well, again,
Especially because you've been in the market, you've been in the industry for so long. You've seen it all, basically.
hey, 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 like you're gonna age me there.
Well,
I just
driving.
started
Well,
very young. I just started very young in the banking industry.
that's not what I meant.
Anyway,
So silly. Oh
anyway,
my
Tess.
God. So
But thank you, Tess. Was there anything you wanted to add before we end today's episode?
I think that's about it. We'll talk about the market update sometime next week or two
Y-
weeks from now.
Uh,
Yeah,
let's wait. So I'm planning that the next episode is right after the rate announcement, so we can
December
have those.
11th. Yeah,
Yeah, so we can have that to talk about, and also we'll discuss the November numbers that would be out by then.
yeah. Can't wait for
Okay.
that. I want to see because there's really an uptick on sales. There's a lot of termination, suspension on the listings because they want to hold it off until next year. So we'll talk more about that in our next episode.
Sounds good. Well, until the next episode, Tess. And for everybody listening, Pinoy Homes Canada in Instagram, YouTube, TikTok, and Facebook.
Facebook.
Until next time.
See ya.